Big moves in the semiconductor space today. Shares of Nvidia, AMD, and Broadcom all closing sharply lower, as well as equipment makers such as ASML Holding and Lam Research. The moves come after two Bloomberg reports, one that says President Biden is considering harsher trade restrictions on the chips industry with selling to China, and the second, an interview with former President Donald Trump, where he implied that Taiwan isn't paying enough for U.S. military protection. Taiwan Semiconductor falling sharply too on that news. But a couple of U.S. chip players actually popped on the reports, including GlobalFoundries and Intel, both recipients of funding from the CHIPS Act, both domestic chip makers. Joining us to break all of that down is Bernstein Managing Director Stacy Rasgon. Stacy, welcome. How much of this has to do with former President Trump's comments, and how much is partly reflected in the fact that GlobalFoundries and Intel really have not been performing as well as some of those other names?
Yeah, probably a lot of it is the Trump comments. And, you know, if you read that interview, your first blind takeaway would be, well, he doesn't sound like he's as concerned about protecting Taiwan from China. Although if you read it, it doesn't really say that. It kind of says he doesn't want to do it for free. All right. This is not atypical. You know, I'm kind of having flashbacks, to when he was president, and we'd be waking up and sort of seeing what the latest sort of policy by tweet was that day, and we're having a little bit of flashbacks to that. But it's not an atypical kind of statement from him, and I don't think he was saying protecting Taiwan is not important. I mean, it clearly is important, but it certainly did impact all of the semi companies that still depend on Taiwan for manufacturing, and we did, as you noted, see relative strength in more of the companies that have more of a U.S. focus, Intel, GlobalFoundries, even companies like Texas Instruments, I think today, that have a bigger U.S. footprint, I think on a relative basis, outperform. So that's kind of the dynamic that you saw with this.
Yeah.
As of the time of this video, Nvidia stock is trading at around $117 after a dip, which disappointed many investors who were happy about a recent recovery in the stock that sent it to $130 per share. Bullish sentiment around the stock today isn't the same, and many investors are beginning to worry. However, the investment banking titan, Goldman Sachs, believes that Nvidia will continue to dominate the AI market, with analysts calling it the industry's de facto standard. Not only that, but Goldman Sachs believes that there are no signs of this paradigm changing in the near future. So, in today's video, we're going to walk you through why the analysts believe that, as well as why the current dip is the perfect opportunity to load up on Nvidia shares. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yeah, Taiwan getting the NATO treatment here, but it makes me wonder, given the run that we've seen in AI stocks and what a geopolitical issue that is, whether you're talking about China or you're talking about regulation and policy, how much volatility we have to be prepared for, both overall and in the chips, as President Trump's comments by the polling get more and more relevant.
Yeah, we'll probably have more volatility. We had that. It's during the 4 years when he was the president. Look, from a sell side standpoint, it was a target-rich environment. There was always something to write about. There was always something that was going on that was moving stocks one way or the other. And yeah, we may be getting back into that again, for sure.
So is this a buying opportunity for any of the names across your coverage universe?
One thing I would note is on, you noted the semi caps, right? And ASML reported last night, and a lot of the U.S. names came down today. I think that was more on the Biden administration comments around potential tightening of the export controls. And what the Biden administration, at least from the news stories, was potentially suggesting is implementing something called the foreign direct product rule. Mm-hmm. Currently, they've already got export restrictions on the U.S. companies. They would like the foreign semi-cap companies to also participate, and they've been somewhat hesitant. And I won't go into what it is, but the foreign direct product rule would effectively enable the U.S. to apply similar kinds of constraints on the non-U.S. semi-cap companies. The thing is, that news does not really impact the U.S. guys. The U.S. guys are already impacted by this. They're already in China with one arm behind their back. What it would kind of do is level out the playing field between the U.S. players and the non-U.S. players. And so I didn't think there was any incremental bad news for the U.S. semi-cap players from at least the reports from the Biden administration.
Goldman Sachs analyst Toshiya Hari recently reaffirmed his bullish stance on the chip-making giant in a new note released to clients. He bolstered his belief in the sustainability of the ongoing generative AI spending cycle, along with NVIDIA's ability to maintain its leadership position through consistent and rapid innovation across compute, networking, and software. And investors should take what he's saying very seriously, as he wrote this note after a positive meeting with NVIDIA's CFO, Colette Kress. As you might already know, the sharp increase in hyperscale AI capex over the past 18 months has raised investor concerns about sustainability of such a growth pace. But while the debate on generative AI's adoption pace persists, and a cyclical correction is expected, recent comparisons of the generative AI cycle with past compute build cycles offer some reassurance, according to Goldman Sachs. Additionally, the CFO highlighted that data center space, power, and cooling concerns are unlikely to derail the company's growth trajectory for the foreseeable future. She also talked about the anticipated evolution of generative AI models over the medium to long term, saying that she expects a blend of models, including those exceeding current models in complexity, such as multi-trillion parameter models, as the industry transitions to multimodal models requiring audio and video training and inference, in addition to text. Additionally, she foresees smaller, more agile models catering to specific verticals or use cases, especially as generative AI grows rapidly across the enterprise market. And on the topic of sovereign AI, Kress said that while governments lag behind the largest cloud service providers in their AI journey, NVIDIA is well positioned to benefit from the build-out of AI infrastructure tailored to local requirements, like implementing specific languages and demographic considerations. With this in mind, what kind of future is Goldman Sachs seeing for NVIDIA stock? Let's find out. Hello, everyone, and welcome back to Investocracy.
DJ Muse, Cantor Fitzgerald's Senior Managing Director, joins us now. He has a buy rating on ASML, price target of $1,320, and says, despite geopolitical risks, focus on growth. All right, well, let's start off with the geopolitical risks, if we can, CJ. What do you make of it? Both, the former president's comments about Taiwan and perhaps more importantly, what may be coming moves from the Biden administration to even try and tighten up these restrictions on China getting a hold of high-end chips.
Yeah, good morning. I think, the potential for more restrictions is real, but I would highlight that, we've already limited EUV, unavailable to China, and ASML, currently cannot service 5 different factories in China. And so the intent is really to limit China's ability to build leading-edge semiconductors. And I think that the efforts the Department of Commerce, the BIS, have put through have done that. But clearly, when you saw that 7-nanometer chip come out of Huawei in China, that led to the red flag. And so I think there are considerations. It is bipartisan in D.C., but I would suggest that we've already done enough on that front. So I think the pullback in stocks, particularly ASML, is overdone.
Despite NVIDIA's mind-blowing gains this year, Goldman Sachs analysts see massive upside still to come. The stock trades at next 12 months PE and enterprise value to EBITDA multiples relative to the sector median, which are well below their respective historical medians, according to the analysts. Notably, they have a price target of $135 on Nvidia stock, but as for their bullish case scenario, they see an upside of 106%, and when it comes to their most bearish scenario, they see a 77% drop. This shows that it's not all sunshine and rainbows. Nvidia faces risks that could slam the stock if the AI party ends abruptly. Tumbling demand from hyperscalers like AWS or waning interest in gaming chips could leave Nvidia's valuation stranded on Jupiter. So, should investors be buying Nvidia shares? Let's get right into it. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
George, geopolitics entering into a trade involving the U.S. and China is never going to go away, not at least in the short to midterm. Nothing fundamental about this company has changed. Machine learning still expected to grow at about 19% a year through 2030. Nvidia and AMD are both talking about demand outstripping supply. They're probably both selling everything they can make. Like I said, nothing fundamentally has changed. So is this just something technically that you watch, wait for your time, and reinvest in this name?
I think so. I mean, I'm looking at it, even from a fundamental standpoint. Obviously, Nvidia has been an exceptional move. Going back to 2019, the stock is up over 3,000%. So, with that said, I think if you look at the financial fundamentals going forward, and right now, based upon yesterday's close, which is inclusive of the big move to the downside today, is trading around 46 times 2025's earnings. Now, if you look at the estimated EBITDA growth, the EBITDA growth is still expected to be close to 95%. Revenue growth is expected to be essentially, about 70%. So if you look at the forward multiple, it's trading at one less than 1 times, its forward earnings growth. And at the same time, you have to look at profit margins, which are absolutely exceptional for Nvidia at 57% net income margins. Now, there can be some encroachment there, and that could come from competition, some prices that may be a little bit subdued going forward. And there's all this talk about some of the other mega cap players, Googles and the Apples, now encroaching on the AI GPU technology space. I think those companies are just way too behind to cause any interference in NVIDIA's, I'm going to call it a quasi-monopoly right now. AMD is starting to make inroads in the inference chip space, but they're nowhere near NVIDIA's tech prowess in the GPU infrastructure.
Nvidia stock has been an extremely popular investment for the past few years for a very good reason, as the company's dominance in AI chips has made many investors and analysts very bullish. Nvidia holds an 80% share, and due to its commitment to innovation, this leadership could continue. All of this has translated into triple-digit earnings growth and investor optimism about the company's future. And that helped Nvidia continue its path higher this year, soaring nearly 150% in the first half. The stock has taken a bit of a pause in recent weeks following its stock split, but we don't think this lackluster performance will last for long. In fact, Nvidia stock could actually soar in the second half of the year thanks to one game-changing move the company is about to make, and that is the launch of the Blackwell platform. Even though it's not even out yet, demand for Blackwell already has surpassed supply, and the company expects this to continue into next year. The system is in production right now, with Nvidia aiming to make it globally available later this year. The company predicts fast and broad Blackwell adoption across its range of customers and their projects, thanks to its rollout strategy. In fact, more than 100 original equipment and original design manufacturer systems will include Blackwell at the launch, and every major computer maker will be part of this. Blackwell is a pretty big deal, as it delivers 4 times faster training and 30 times faster inference than NVIDIA's current flagship product, the H100. And when customers save on time, they not only make their AI projects operational faster, but they also save on costs. In fact, NVIDIA says Blackwell results in a 25 times lower total cost of ownership for a customer compared to its current Hopper architecture. So, Blackwell should be a major step forward for NVIDIA and its customers. Since NVIDIA plans to release Blackwell later this year, investors should expect to see its impact on revenue growth next year, but we still think that the launch alone could be a great catalyst for the stock's performance in the second half of the year, especially if NVIDIA continues to report high demand in upcoming quarters. So, as investors anticipate earnings growth ahead, they may choose to get in on this stock now and benefit as Blackwell revenue starts rolling in. However, let's not expect NVIDIA stock to replicate its triple-digit first-half performance, but considering the company's earnings growth over the past quarters and the idea that Blackwell could serve as a significant new growth driver, it wouldn't be too surprising to see NVIDIA stock climb in the double digits in the second half. After all, analysts forecast average annual earnings per share growth of more than 46% over the coming 5 years. But what do you think about NVIDIA stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for NVIDIA is If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.